Yeah, hi traders. Obviously, we've got the RBA meeting coming through at 2:30 Australian time. That's going to be accompanied by this statement on monetary policy. And then shortly after that period, we've got Governor Bullock, who steps up in her press conference as well. And of course, in a situation like this today, we are looking at the variables, whether we're going to see outsized moves and how that plays into our risk management, whether we want to hold positions over the meeting and the chain of events through the day. And for some people who look to trade these special situations, these tactical situations, they're looking for a really clear skew in the risks for the Aussie dollar and also for interest rate stocks. And if they see a high conviction and a high skew in that probability, maybe they'll trade that situation. But for me, this is more a risk management exercise and getting that positioning over the meeting absolutely spot on. So there's a number of ways we can factor that today for traders, and perhaps one of them is positioning. I will say that leveraged accounts and certainly real money accounts are long Australian dollars. They've been sort of buying into the Aussie recently on this sort of tactical play that we are seeing China tech working well. We've seen a meeting yesterday led by Xi Jinping with Jack Ma as well. And I think people are getting pretty excited about what they're seeing in sort of Chinese economics. And also certainly in Chinese asset markets as well. So people have been expressing that through the Aussie. It's not been a rate story per se. But the market is certainly long of Australian dollars. Retail less so. They are modestly long, but we are seeing a very, very small position there as well. I guess the other factor is what's happening in the volatility markets, and we can see that Aussie dollar overnight and 1 week implied vols are at very, very sanguine levels. Maybe they'll build through the day in terms of overnight vol. But that's a pretty good indication of how the market sees expected movement up or down throughout the day, and also risk reversals. The skew in call versus put volatilities is very sanguine, very sort of balanced at the moment. So the market, if you're looking at the volatility markets, is saying that on balance, we're probably not going to get fireworks coming through. So that for me is quite a good indication about expected movement and what the market's expecting. Going to the rates market and the Aussie swaps market, we can see that there's an 86% implied probability of a rate cut today. Now, I think part of that is while there's within the distribution of bets within that, there are people still expecting a hold. They've obviously seen, the 4.3% build in household spending, business confidence has turned up a little bit. Obviously, we've had a very tight labour market for some time, and maybe they're saying balance that the RBA could leave rates on hold. But the clear skew and where the weight of money is at the moment is for a rate cut coming through, so 86%. I think that's been guided also by the fact that so many people have held this strong convicted view for the whole of the year, with rates pricing above 70%. And the RBA haven't pushed us away from that. They haven't guided against that. And really since the last two decades, I suppose, there's only been 3 occurrences where the RBA have gone against the highly convicted market. So from that precedent, the market has gone closer to the RBA meeting. The RBA haven't guided us away from that point. And so, conviction has built that this is the time now. And that's obviously been driven by greater confidence in the inflation forecast for 6-month trim mean inflation now running, in the RBA's target. And that'll be followed pretty soon by the annualised numbers as well, and wage pressures obviously come down. So the market is discounting a rate cut today. And if you go further out the swaps curve, you can see just about 81 basis points of cut. So the market's saying we're going to get a cut today. We're going to probably get another cut coming through in May, another one in December, maybe a bit more. So 2 more cuts after today. Now that sort of plays into the idea about what is going to be the guidance from the RBA. Are they going to give us firm guidance that they're going to come out and cut rates further down the line? And it seems the volatility markets is telling us that's not going to be the case, that it's going to get this kind of undefined, uncommitted guidance coming through. And that's partly because we are going to see some personnel changes within the board. We're going to see a split in the board and new personnel coming through. So those people who are in there at the moment probably don't want to hand over a strong commitment and speak on their behalf. But also, I think the RBA have been fairly nuanced in their guidance. They haven't been explicit as other central banks in their easing going into this cycle coming through. And I think that's the right call. I think the RBA will cut rates today and they'll give a fairly non-committed, a very, very much a data-dependent view. And they're probably going to be looking for the Q1 CPI numbers that don't really come out until the 30th of April. And then obviously the Q2 numbers coming through on the 30th of July before they sort of make conjecture about what happens going forward. So they're going to be firmly data-dependent. Obviously, they're going to welcome what we've been seeing, inflation falling towards target. But their job here is not done. So it's going to be very uncommittal. From that perspective, will they meet that rates pricing for the end of the year? I don't think that's going to be the case. And I'll probably sit in the camp that there's probably more downside risk to interest rate sensitive stocks than the Aussie dollar. I guess things like banks, property stocks, some of the consumer stocks which have run hot pretty hard. If they do get that loose and undefined data-dependent guide that doesn't necessarily meet up with what's been priced through the curve, you could see some downside in those, maybe a little bit of a pop in the Aussie dollar coming through. But as I say, people are using the Aussie more as a sort of China proxy at the moment. So I think at the moment what we're seeing is a market that is long of Aussie dollars. They built these rate expectations coming through. Will they meet that pricing? I don't suspect they will, but I think the market will give them a bit of a cushion. But I don't think there's going to be huge downside in the Aussie dollar today from the rate cut. It's largely dictated and largely priced. Obviously, if they do leave rates unchanged, I mean, there's no slam dunk. They are going to cut rates, but if we see them leave rates unchanged, you're going to see a nice pop in the Aussie dollar. But the extent of that could be mitigated by their guidance. We'll probably give a fairly clear view that they're going to be cutting in the April meeting as well. So one to watch. The market's not expecting fireworks. Is that pricing wrong? Obviously, we have to see. Let us know how you're seeing this trade today.